Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk. This is my friend Rob from the Mindful Investor. As always, we are going to entertain you with a lively discussion about the difference between dividends and option selling. So it's going to kind of summarize what we had talked about previously. So, welcome, Rob.
Yep, thanks for having me again. Yeah, I'm looking forward to this podcast.
There's definitely risk with options. It's not the holy grail of investing. There's pluses and minuses. You get better returns, but the risk is there as well. And yeah. I mean, I found that I have to watch it as well, even though I've never bought one back. I think as we talked about previously, nor yeah, I've never bought one back. I've either let it expire worthless, or I lost the stock, or I got
Mhm.
the stock, which saves me on transaction fees perhaps. And if I got a stock that I was only half happy with, then I would end up selling a covered call, in 3 days um, afterwards. So, but yeah, it's a lot more active. I mean, it's not like day trading, but you do have to watch it a little bit, I guess, right?
Yeah, yeah, it's not for everyone, and if you go in blind, you can you can lose a lot. So, and I've seen people who chase premiums and they don't really understand like what these contracts mean. They say, "Oh, I just want that $10,000 premium," but they don't know how much is tied to it. Like if you want that 10,000 premium, you're risking 100K possibly.
Hmm.
And yeah, it can go in an instant. So just like in a week, if the stock tanks 20%, you're gone. Yeah, pretty much you can get margin called just like that.
Well, yeah, if you're on margin, yeah, then yeah, after you get the stock for sure. I mean, I always do the options in like six to 10,000 at the most, and the 10,000 would be something that, look, I would buy the stock today. I'm more than happy to buy it 10% off, and if it keeps going down, I would hold it anyways, usually just for the dividend. So I don't have that problem. Uh, but yeah, margin calls are scary. So I always make sure I'm able to provide the money somehow, and not not get other stocks sold out from under me, or having to sell them myself. So
It's quite interesting when you get margin called because you don't know like what they want to sell. They normally is like alphabetical.
well, but don't you get notice? I've never gone through this. Don't
No,
you
you
get
guys,
notice?
it just snaps. It just snaps. Like we just get emails like, oh, 10 shares of Apple got sold and 20 shares of your Alibaba got sold. Just like that.
Starting with the A's, not the A's.
Yeah. 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 You don't want that to
Okay.
happen. I've been
Uh,
there. Yeah.
yeah, like in Qtrade, I have within 2 days I have to provide the cash. Otherwise, they start charging me interest. I mean, I'm not nowhere near my margin. Uh, so yeah, it adds extra risk, but I mean, it pumps up your returns as well. Then again, options already have a bit of a multiplier, where you're getting, like I said, 20 to 30%, and I've had options which annualized made up over 100%, but that was because it was very volatile, and um, usually those work out for me, knock on wood, but not not always. The kind of the other observation that I had, dividends versus the options, is that dividends are sort of more certain. You see that they're coming up, and unless something horrible happens to that company, that dividend is going to be there. But I think people are tempted with options. It's like, okay, I need to pay my credit card off. Okay, I'd better do an options trade. They might force themselves into something that's either high return, or into just something that's inappropriate. They're like, okay, now I've got it. I don't know if this is going to be good, but okay, let's see what happens. So like with dividends, there's a relatively low risk, but with options, I mean, bad things can happen. So it's better return, but yeah, more risk, I think is the theme that we're trying to set across here.
Yep. Yep. High risk,
And
high reward.
yeah, well, and either you have to buy it back or you have to get the stock. So like you have to plan ahead before you sell the option. You need to know, okay, I'm going to buy it back, or I want the stock, and here's the money sitting in my savings account that I can buy the stock with. So uh, all I know is that the only entity that is sure to get paid is my brokerage, with all the different all the different fees and so on. Especially if you get assigned, uh, yeah, I do have some heavy fees, so I'll have to look into that on Qtrade, see if there's anything better. But honestly, moving my entire account to another brokerage would just be painful. I've sort of got all the savings accounts and so on linked with the brokerage, and just to move something now would be a little bit of work. So
Yeah, it depends. Yeah, how much it's costing you, right? If it costs you thousands of dollars, and it may be worth a day or two to fix it. I think it
yeah,
only takes a day or two. Yeah.
when you look at it over the course of a year, like it's just for stock trading, it's hundreds of dollars, and once
Yeah.
you figure in the options. But
Yeah.
so, uh, what do you think for your cash flow? What percentage do you think comes in from selling either covered calls or cash covered puts versus the dividends?
Yeah, I definitely make a lot more from selling premiums,
Okay.
but a lot of times I use that to buy options, so that kind of funds my call and put options, which is a different play on itself. But just comparing dividends to selling options is hands down is selling premiums, and I think the number would be like at least 3 to 1 at least.
Oh wow. Okay.
Yeah.
All right. Well, you're more adventurous than I am. Uh, yeah, I get about 4 times as much in dividends on a yearly basis compared to what I've in the 9 months I've gotten from the premiums, from selling the options. So I haven't really gone big with it. Like I said, the most I've had at risk was 60 grand, and I think right now I have about 30 that's waiting for the May 19th. I think is the next deadline, or the next kind of options day. I have in my
Yeah.
calendar, I have options day, because I just kind of use the third Friday of every month, right? I just use that one. I don't use the weekly ones or anything.
Yeah.
And so yeah, I'm always kind of waiting and seeing how much money I'm going to have to come up with and what stocks I'm going to lose. So
Yeah.
it is still a form of gambling for me. It's sort of exhilarating and wrong at the same time.
Yeah, it's not for the faint of heart. Yeah, for sure. Like I think I did a video early January, and I was just counting like how much premiums I collected on like the third Friday of January, and I had no idea. Like I normally never count. I never track it. I don't have a spreadsheet, and I was counting, and then because I think last November things were very volatile. Things
Uh,
were dropping like crazy. It was dropping like 10% in like 2 weeks or whatever, and then that's why I made some plays. And then in that video, I counted, I got like 12,000 US just on that collecting on that day. I
nice.
didn't know how much I was risking, maybe like half a mil, but
Well, okay. Yeah, I mean, percentages need to be used. Yeah, if you've got a huge,
yeah,
huge amount at risk, then
yeah, I don't know. Yeah, I've been doing this for a while, so it's not that bad.
uh, the I think you're supposed to limit each trade to about 2% of your portfolio, just so you don't blow it up, basically, right? It's like some people go all in especially if they've had some losses. It's like, okay, I'm going to do this one big one and I'm going to make everything back up. And that's when they lose even on that one, and their portfolio is gone, and there goes the options trading. It's over.
Yep.
So
Yep.
yeah, it. I mean, we all learn as we go, and I made mistakes at the beginning buying stocks for the premium on the covered call, or getting stocks that I didn't want from selling puts on them because they had high premiums. So while that helps the cash flow, yeah, it's not great, but it's nice to have the dividends to kind of backstop you, that that you can pay your credit card bill and you can pay your strata fees out of the dividends, and then just play for the options premium with stuff that you can sort of afford to lose. So it is like going to the casino, I think, in some cases. So all right, I think we sort of covered the difference between dividends and option selling. Uh, anything to add, Rob, or do you want to give a quick summary? I think we both sort of agreed we're both in the same boat.
Yeah, pretty much. I think if you've invested in dividends all your life and you kind of want to get exposure in options, just sell like one contract a month and just observe how the prices swing. Like start off easy. Don't go like, oh, I want $1,000 a month type of thing. Just take the $100 first and then build up your risk tolerance, because it takes yeah, it's not for the faint of heart, as I said. Yeah.
Right. While the dividends are for the faint of heart,
Yeah.
because especially North American companies will do anything and everything to prevent themselves from cutting those dividends. Uh, so yeah, the dividends are usually fairly safe. So, but yeah, if you want to supplement your income a little bit, within how does the BC Lotto go? Know your limit, play within it.
Exactly. Yeah. It's
Yeah.
a good motto.
Ugh. I know we've made several comparisons between options and gambling.
Yeah.
Might be a great trend. But anyway, I think we covered the topic. I hope everybody's learned something from our experience. Thank you very much for watching the podcast. I've been Alesh Eisner from Canadian Money Talk, and this has been Rob from the Mindful Investor.
Thank you.